Hello everyone, this is Andy, your moderator. So today we're going to look at actually three things. The first thing, I just want to go in a bit more depth on how we see the markets and how we should see the markets. Then I'm going to touch on the average daily range. We've done this before, but I just want to touch on it again because I feel it's important. And the last thing we're going to talk about is the strength meter. Now, people have heard about the strength meter before, but I really want to go in a bit more depth in how we can actually use it and how you're supposed to use it, as it can make a big difference to your trading, okay? And how we look for trades the next game day. Now, this all came from somebody asked in the chat that they were getting overwhelmed, and this is just going to help traders. You know, what do you look for the pairs for the next game day? How do you trade them? What should you be trading? And we'll go into that in a bit more detail, okay? But for right now, we're going to start on this page. So this was something that I came across recently, and I think it describes, how trading actually works. The bones of the meat of the thing, right? How do we actually trade each day, and who's actually making the moves and how it actually works, okay? Where are we in this whole thing? We are right at the very bottom, the retail community, okay? Above us is the retail market makers, the retail ACNs, the hedge funds, the commercial companies. The hedge funds themselves are just pure retail traders, but with bigger capital, a lot more capital, okay? Then you have the small, medium-sized banks. That's the local banks, not the major banks. Above that, again, you have the electronic brokering services and routers. So that's your electronic foreign exchange, what they do in Wall Street. Major banks will be on top of that as well. So the major banks is your JP Morgans, and we always think about the major banks are the people who are creating price and moving price. Well, they do one of those things. They move price. They don't create price, because creating price comes from somebody above them, the central bank algorithm. The algorithm pricing gives opportunity for smart money for the major banks to enter. Now, how do we know that? It's because the major banks, these are the people who, have been manipulating price for quite a while. These guys are getting penalized for manipulating price. I mean, why would they do that if they were creating price? There would be no need to manipulate price, right? So that tells you straight away that there's something happening above them as well, and that's these central bank algorithms. The central bank algorithm is what makes it all work, okay? So, as a retail, coming from a retail background, as many as well, you see these things, these algorithms that create patterns every day, every trade, every pair, throughout each of the weeks, okay? So in other words, you have Fibonacci's, you have trend lines, you have channels, all these other things that are going on in the background, okay? These things work day in, day out on each and every chart, okay? Why do they do that? Well, they do that to make money, to swipe liquidity, to put it there for the low-hanging fruit, so people can have a go at it to see if they can make money. Unfortunately, this thing has been going for so long that people fall into the trap. These retail brokers are getting fleeced. That's why we are trying to, promote the smart money concept, because we want to be thinking like, these algorithms and these major banks, and how are they getting in there? We want to ride their coattails. We want to make money on the right side of the trade, okay? How do we do that? We observe the masses. We observe the masses and always do the opposite, okay? That's why retail, we try to understand retail the best we can and play off of those things. So I just wanted to show you this pyramid of trading, because I believe that this is really how and what's going on in the fundamentals of the market and how things are moving. I mean, the central bank algorithm is made up of interest rates, yields, bonds, all this other good stuff, right? You don't need to know too much about that, apart from the major banks are playing off of it. yes, major banks can manipulate price by putting huge wedge of money into the market. But you got to remember, these major banks, these traders are banking on 20% per annum. They're looking to get 5% or 5% per quarter, roughly, which is a huge amount of money on huge amount of money coming back to them, okay? Even though it is very small. They're not the best traders in the world, but they're very smart, okay? So I just wanted to touch on that because I thought it'd be a really good introduction for, how the markets move. So just moving on, 1 second. So I just want to talk a little bit about the strength meter. Now the strength meter comes in an indicator format on an MT4 platform, okay? And you've probably seen it, and some of you already have it who have reached out. The strength meter, I'll just pull up here. Not that one. Let me see now. Sorry. 1 second. I'll just get the right chart up. So the strength meter tells you, what pair is actually got the strongest pair and what's the weakest pair. Okay, is really what you're looking for. Right now, the time that's recording is 6 o'clock PM UK time or Ireland time. But right now, the odd is 6.9. It's the strongest, and the USD, the dollar, is the weakest. Okay, why is that important? So if you were to look at a chart without me even looking at a chart, I know that the Australian, the Aussie is actually going up and the USD is going down. So the AU is going up at the moment without looking at a chart. If I was to look now at the chart, let's just look at the chart very quickly. AU, let's see, AU, let me move this out of the road. AU, there we go, there's AU. AU is going up. That's because the strongest pair is AUD and the weakest pair is USD. Make sense? Okay. So that's Aussie USD. I just want to show you something that I'll just move the picture out of the road. This here was taken yesterday, okay? So I took these at 9, 10, 11 and so on, okay, each hour, just to give you a flavour of what we're actually looking at here for these strengths, okay? So yesterday, CHF at 9 AM in the morning was the strongest pair. JPY was the weakest pair. That means the price is going up, okay? The price is going up. So if you were to look at this chart an hour later and the CHF is still up there and the JPY is moved up, that means that yes, the CHF is still stronger, the Swiss, still stronger than the JPY, but the JPY has just took a spike. This could be a news event. See, this is the beauty about this. You don't need to follow the news, but you would know there's something happening because there's been a spike in the JPY. Now, is it long term? Probably not. Probably find that this thing is just, news just came in, the things fluttered up. So in other words, you were going up, you started to go down again because the JPY is coming back up again. And these things are peak and trough, okay? So as you go to the next hour for Euro JPY, sorry, CHF JPY, CHF has went back up to the top. It's the strongest pair again, and JPY has stayed where it is. So that means that slightly the CHF has went back up again in price, okay? So on the left, it went up because strongest, weakest. Then it came back again, so the price would have went down. And then CHF an hour later went back up again. So that means without looking at a chart, you're able to tell where the strengths are and where the price action is probably at the moment, okay? Now you'll find that, going on the next hour, CHF is still the strongest pair and JPY has just lost its signal, it's lost its strength, okay? So in other words, CHF is still going higher. So if you were in a trade and you actually had the CHF JPY from 9 o'clock that morning and you found, say, an equal high and you were aiming towards that equal high, you were almost at it, and by 11 o'clock, would you pull out the trade then? Well, to be safe, you probably would. However, now that you know that the CHF is actually still going strong and the JPY is actually losing strength, that means the CHF still has a bit to go, and you could stay in the trade then. And it's still 2 p.m. still the same. CHF started to lose some distance there, and JPY has came back. So at 3 p.m. now you're starting to get out the trade. You're looking for exits. I hope that makes sense, and hopefully when we go back on the charts, it'll start to make a bit more sense. You'll start to see the fluctuations, okay? 4 p.m. CHF, JPY, still CHF is above it, CHF is still above it, CHF just getting close again, CHF, JPY still the same here. 11 o'clock last night, CHF went to the bottom of the pile. It'd been very strong all day, and now it went to the bottom of the pile. JPY just took it over. What does that mean? It means that the price is now shot down. Okay? And at 12 o'clock last night, JPY was one of the strongest. So let's just look at that in the chart. CHF, JPY. So yesterday it was very strong, very strong, very strong. Took its ADR. Let's see, I just zoom in here a bit. The whole ADR pushed all the way out, and then something happened in the market. It changed. Remember I showed you it started to come down again? Well, it's hit its ADR box, flicked outside, and started coming back again. That's the time to exit out the trade. It's just another confluence of things to look at when you're looking at your trades and how far it will go in that day. Yes, the ADR will tell you, I'll give you a probability of where to come out of that trade, but also the strength meter is going to give you an extra confidence on how to deal with it, where you're exiting the trade or getting back into something else. So let me just show you something else here. So if we were to look at that logic on the smart meter, okay, if we go back to where we were last night, if you're looking for a trade the next day and you're not sure, okay, you're looking at the strengths. If we look at the strengths of yesterday, right? So if we look at last night, the euro was the strongest pair, and at 12 o'clock it was still the strongest pair. So that's going to tell you that there's a good chance that it's going to stay overnight the strongest pair. Okay, you will find out the next day when you wake up, maybe 7 o'clock Frankfurt, that if euro is still up there, you've got a really good chance that this thing is going to go up. Okay, you could be from the night before, but you will have swaps and things like that you need to contend with, depending on what your broker is. But so euro is the strongest pair, and the bottom one, the chef, we knew about the chef anyway, right? But let's look at the CAD. So the euro CAD, so euro is the strongest and CAD is the weakest. Okay, what happened the next day? So euro CAD. So CAD, something happened to CAD at 7 o'clock Frankfurt. The thing just, tanked. The thing went down. So probably a good idea to stay in it, because at 8:30, as we see here, euro shot up. So it's from 11 and 12 o'clock last night, very strong, to 8:30 in the morning, still strong. That should tell you that if you're in the trade, you're still in the right trade. And now that you're in the right trade, the CAD, okay, it moved up 1.1 to 3.1, but you're still in a good side of the trade. Let's see what that looks like in the chart. So if you go to EuroCAD, hopefully you can see this. Before we even look at it, right, let's replay. Let's go back to last night. So last night was here. This is the 10 o'clock open. So for those of you who've went through the ADR with me, you'll understand what's happening here, right? And if you've not went and seen the ADR video, I suggest that you go and have a look at it, right? Because that is really going to help your trading. So on the basis that the strength meter, the euro and the CAD, the euro was really strong the previous night, the CAD was the weakest. We know now that 8 o'clock, 8:30, that it went back to the euro being strong again. So from last night, this is the 9 o'clock. So 10 o'clock is where the candle starts. So there's 10 o'clock. So we've got it on our heads now, right, that the euro and the CAD is going to go up, okay? So now let's look at what happened. So there's, let's play it through, 11, 12, 1, 2, 3, 4, 5. Now you'll notice that we're not taking out if we're in the trade. 6, 7. Okay, so that's 7, is it? No, 6, one more. This is the Frankfurt Open at 7 o'clock. We're thinking Euro CAD. Euro is still strong from last night. This is a pair we should be looking at, right? So why? Because it's strong. Let's look and see what happened today. Look at that spike. You have just went, let me just see now. This thing has just shot up in the Frankfurt Open 35 pips. So, you know, knowing this information is going to be very powerful to you. Let's keep going. You know, you would be looking at this probably every hour to make sure that you're still in the right side of the trade. Obviously, if there was a shift and the euro became lower than the Canadian dollar, it'd be time to get out, right? So let's just see what happened, how it played out. We did get some pullback. You know, that's expected. You know it's all going to play out. It never broke the structure. We still see it's not broke the structure. It's still going on. Move out of the road. It broke small structure. Yes, if you were scalping, it could be a chance for a small scalp because it's probably flipped or came close to the differential. Okay. We'll keep going. At this stage, look at that. So that there is probably, remember it's NFP today, so you're expecting some kind of fluctuation. And you want to remember, guys, that we need volatility in the market. So this is the reason why the strength meter is so imperative, right? This thing is just shot up again. So we are now reached our ADR of, we know now it's 100 pips. We were 35 pips in the Frankfurt Open. We came back 10, 15 pips. Let's see, 20 pips. We came back 20 pips. And then at 1 o'clock, this thing burst 62 pips. This is information that's there, it's readily available. You don't need to check the news. This thing is telling you what to do next, right? Will it always work? Most of the time, if you're heading for the, you know, keeping an eye on every hour that the thing is still strong from the hour before, then yes. Something that's just flicked that more, like we'll go into a pair. Let's look at another pair, right? And I'll just show you the difference when you flick the thing. So let's go back to the Word document. So let's see. Okay, so see here, you see that from earlier morning yesterday, the GBP was very low, okay? The GBP was at the bottom. So you know that's the weakest, okay? And throughout the day, the GBP, something happened at 1 p.m. yesterday that it actually spiked up. But look what happened then after it just started falling away again. So that means two things. Either the news happened or there was manipulation of price that we were speaking about in the first instance, okay? So it's came back down again. That means it's got weaker and weaker. And look what happened, 4, 5, 6 p.m. It was the weakest link. It was the weakest currency pair, okay? So that means that's great information to you. So now you know that if you're trading the GBP around those times, don't be expecting a buy. You should be expecting a sell. If you're in a buy, it's time to get out. These things will let you know that, okay? So going back to what we're saying, right? So GBP, you're still in the GBP. GBP 7 p.m. is still weak. It's growing in numbers now. Look, 4. In fact, look at that there. So the GBPUSD, the USD has jumped above the GBP. Okay, it's flipped. The USD is still stronger than the GBP, but the GBP is gaining strength. Okay, and then look what happened at 12 p.m. It flipped again. So the GBP started getting stronger and the USD started to fall away. That there is, you know, is really strong information for the next day's setup. So what you could do is look at GU the next day. Look, GBP at 7 o'clock Frankfurt is the strongest pair. Yesterday it was the weakest. it's all of a sudden became the strongest. And where's USD? It started to fall away, okay? So USD was 3.9, okay, it's 4.9, and then it started growing in numbers, okay? So it's kind of there, thereabouts. So what that means is it's kind of stalling at price. Let's just go into that pair and see what happened, because it's based on the GBP was very weak yesterday and now it's became very strong. So if we go to the GU, you've probably seen the outcome here, but let's just replay it back, right? Let's back to where we were, replay, back, okay. So this is the 10 o'clock candle last night. I just showed you the strengths in numbers, okay? It went from the weakest to the strongest, and let's play this through. So 7 o'clock is here. So if we pause it right now. So this here is the Frankfurt Open into the London Open. So the Frankfurt Open, we knew that the GBP was growing numbers. It was gaining strength. That should be a big indication to you that this thing needs to get, you need to buy this, okay? Next pair, or the next candle, you know, this is the hour chart. The next candle, this thing shoots up. It stays strong throughout the day. You check that periodically every hour, and if it's still the strongest pair or round about the strongest pair and the USD starts to slip back down again, that should tell you that the thing is still going to go up, right? And what does it do? It pulls back slightly, okay? That must have been that the fluctuation, when I showed you the GBP and the USD was kind of similar. That's exactly what we're looking at now. It's stalling. I did say it was stalling. But, you know, that's probably just before the NFP. This thing knows that the GBP is still strong, okay? This thing wants to go up. Where does it want to go to? Well, there's a good chance it will reach its ADR box. Aha, the ADR box is 94 pips. We are currently, let me see, 36 pips, 37 pips away from the top of that box. The probabilities is that this thing is going to hit that. Let's see what happens. Comes down, spikes up, there you go, breaks through. Okay, that was just purely based on the strength meter and your ADR box for the next again days trading. This is going to narrow your focus and let you know what's actually trending, what's volatility is in the market. This is what you need for good movement in the market for the next day. If you have a pair, let's just backtrack a bit. If you have a pair that's not really going anywhere, so there's the NZD, NZD Chef, this thing's not, there's nothing happening there. There's the odd, they're kind of similar. The odd JPY, at this time, this thing is stalling. If you have let's just say, for instance, you have a point of interest on a chart that's an odd Japanese yen, okay? And you want this thing to move. This thing is not going to move if it's round about the same price and the same strength. So this thing is just going to stall. 8:30, odd went down, JPY went up. Now this has gave you an indication that the JPY is on the right-hand side, so that means that if it's gaining in strength and the odd is weakening, that means this price is going to go down. Okay, so this is really good information now that you're now building up a picture, a narrative of how you're going to trade that day. Okay, it's very simple, very easy approach. I mean, you just stick this thing on the MT4 and you just check in every now and again just to see where you are in your trade and how your strength of your signal for your pair is actually reacting. So I hope that makes some bit more sense, okay? This is mixed in with the ADR. I'm just going to show you something ADR before we finish. Just 1 second now. So let me just show you the MT4. So on the MT4, what we're looking at here is the actual strength meter, and you know, everything that we showed you up to now. You don't need to worry too much about this indicator and everything else it does. It does get complicated. You don't need to know that. You don't need to know all this. All this is saying is there's a differential between, you know, the high and the low, and you know, people will pinpoint to say that, you know, there's more percentage there than less. forget all that. Just concentrate on this. This thing updates the sell every 5 seconds, I think. Keeps updating, okay? So it's just something you can check in every now and again. So moving on to the ADR quickly, I just want to show you this as well. So, you know, people are looking at to trade maybe 3, 4, maybe even 5 pairs a day, okay? And what pairs should you trade? Myself, I actually like to trade the GBP crosses and the Euro crosses. Why? Because I know that on an average daily range, these things will move more than 100 pips per day. Now, I'll say that again, more than 100 pips a day. And the reason I say that is because if you have a risk to reward that's, you know, greater than 1 to 5, you really need to be in the positions of something that moves daily more than 50 pips at least, okay? Now, looking on the screen here on the MT4, you will see that this is the average range, okay? Average price range, but it's the average daily range. Same thing. You will see, you know, 65, 53, these things are lower than 100. You come down here, this one, EuroCAD is 106. The next one, Euro New Zealand, is 117. GA is 128 or 6, I think that is. GCAD is 137, and one of my favorites is GN that moves the most. GN is 143 pips. Okay, now if you have that price to play about with, then with the strength meter and your ADR and your total range within that day is going to give you a really good, you know, if you're in a buy trade and you're trying to get to the other side of the top of the box, then there's a really good chance the probabilities are there that you'll probably reach that day. If you have something that's outside the ADR, that's a very small ADR, let's just, for instance, let's see looking down this chart. Euro GBP. Everybody loves to trade the Euro GBP, right? But it's only moving 43 pips a day. If you have a 10 pip stop loss, you're trying to get 1 to 5 minimum, the chances are, the probabilities are not in your favor and you won't get 50 pips, okay? It's just food for thought, right? I mean, you may get, you know, the strength may be in your favor, or you may get 20 pips or 30 pips. You may get a 1 to 2 or a 1 to 3. Great, okay? But this sort of stuff will give you the information that you need in order to trade throughout your day. I hope that makes sense, okay? So what we're showing here in this indicator, for instance, it tells you here the percentage that it's actually moved throughout the day. Now, I've got to reiterate, right? An average daily range, I'll show you a box within 14 days of movement. It's giving you an average, not an actual, okay? It's an average, not an actual. Sometimes it'll go more than that. Most of the time it won't, okay? You've got to remember as well and be cognizant of the fact that, you know, the market will trend 30% of the time, and 70% of the time it's still, you know, in a ranging sort of way. It's consolidating, okay? And with that information as well, you know, you can use this and, you know, everything that you know throughout your trading day to get into your trade and be able to know in advance where the probabilities will be held, you know. So looking at this today there was a lot of movement in the market. You know, OddCAD is a average range of 65. You've got to remember this is NFP day as well. It moved 92 pips today. It went 142%. You know, that's not the norm for its daily range. NFP, manipulation in the market, this is when the banks have the power to move things in a certain direction and take you out your trades, okay? There's a lot of stuff that stayed within its range, but there is, you know, cognizant of the fact that it is NFP, these things move today, okay? So this is just something to help you. If you're looking to trade maybe 5 pairs a day, the next day, whenever it is, or just home in on what pairs you should be trading, this is going to help you. No means, okay? So I hope that helps you. Is there anything else? Maybe just to recap. So we spoke of the fundamentals in the market. We spoke of the trading triangle. You know, the algorithms, the banks, the major banks, us, the retail, and how we play into those, how we look at smart money to, you know, look on the better side of the trade, the right side of the trade. We looked at the strength meters. I have a strength meter I can give you, the same one, where you can use that the day before to see where your strengths are, not just the day before, but also during that day, to make sure that you're in the right side of the trade and stay in the right side of the trade. Okay, if that flips and goes the opposite way, it's time to come out, because there's something happening in the market that's either trying to manipulate you out of it and hit your stop losses, or gives you the confidence to stay in that trade and maybe even get to the top of the average daily range box. Okay. I mean, just that alone, even thinking about, you know, the strategies that you use during the day, the banker strategy, you may see something in the chart where it's everything's looking great. You've hit an order block. The order block is telling you that it's going to buy. You get into the trade, everything's looking great. Maybe if you check the strength meter and that strength meter told you that, you know, it's still got strength to the downside, not the upside, you should be hesitant then. You should be hesitant that this thing may, you know, go further down, further south and hit your stop loss. Or it may be that you need to widen your stop loss because the strength is still to the downside. It's food for thought, right? The opposite, or the flip side of that is that you've hit the banker's candle, you just get into the trade, you're tagged in the trade, you hit the strength meter, it tells you that the strength is to the upside. You know, perfect. Now you have pure confidence, 100% confidence that this thing is going to go in your favor. Is it going to stay in your favor? Keep going back into the strength meter. This thing will tell you throughout the day if you're in the right side. Then we looked at the ADR. The ADR is to narrow your focus on how many pairs that you're going to trade, what pairs you're going to trade, and why you would choose the ones that you're chosen. Okay. I like to trade, as I said, the GBP and the euros, because I know that those crosses are going to produce more than 100 pips per day, and I'm going to have a good range to play with. The smaller ranges are still good, you know, and you know the ADRs will bounce a lot more and may help you, but it's just something to consider when you're thinking of your pairs that you should be trading. Okay, now I hope that helps you. I've probably went over my time I was going to spend on this, but you know, reach out to me. I'll give you the indicators. I'll give you the ADR indicator. I'll give you the strength meter indicator, no problem. I'll help you with it. Reach out to me if you get any questions. And, you know, guys, stay safe in the markets. Use these tools. These tools will help you, you know, project you into the next game day, keep you in the right side of the trade, which is what we want. You know, we'll learn together. We'll keep going together. And I hope this really helps you. Okay, so that's it from me, guys. I'll catch you in another video. Reach out to me in Discord if you need any help. Okay, thanks very much. Speak to you soon.